Hello everyone, welcome to Trade. Today we're going to be seeing what happened today on the budget day and how we can trade tomorrow. What I've opened here is the 15-minute chart of Banknifty, and yesterday also when I made that budget day trade plan video, I did mention about the worst case scenario, and it happened to be the worst case scenario happened today. We kind of gapped up because of the US markets opened higher and the Nifty was showing a gap up, right? Because of that we gap up and we did go higher until 38,800 and then fell. Even this fall was okay. We would have been in profit if we had taken that straddle, but this up move came, and so anybody who would have taken that straddle of at the money call and put would definitely be in loss because of this move. Didn't expect this kind of a flat. See, the intraday moves were there, but on close to close basis we have just closed flat pretty much where we opened. So this is not the best way to make money in buying at the money put and call via straddle. See, our profits were good until here. Until here I was in good profit until 38,800. Then I in fact opened 38,700 CE and PE over here, again added, and finally had to exit everything over here because it kind of felt that even if the breakdown comes, I don't think because all the puts were out of the money, right? 38,100 and 38,000. So I had to close all my position here with loss. And then this fall came and this up move came. So either way we would have been in loss. So, but I did close everything over here when this fall started, and also to add to my close was this VIX. India VIX was falling, where the premiums were drastically reducing, right? So when this VIX is falling, even when the market is not moving up or down, the premiums were drastically reducing because of the VIX fall. That's why I had to exit soon, and exited around 12:45 or 1 somewhere over here in this red candle. I exited all my positions, and let me just get rid of this drawings. See, this was all part of the plan, whatever like the loss we incurred and the trading that we did. But just looking back now, if I just stuck to my CPR logic and traded based on CPR, just buying, obviously it was not the best day to buy, meaning because of the news involved around the markets, right? The budget, it was not advisable just to go direct buying naked puts, but signs were there. We could have done it, but we refrained to do that. First of all, this 15-minute candle itself showed a nice bearish sign at a good resistance, R3 of CPR, and this price action resistance where we had this double top. We got a nice evening start which indicated that the market may turn from here, but it's just because the news was surrounding, we could not take any entries on like a direct call or put buying, so we refrained. But even these moves were pretty good, and this bounce that we got over here, right, is from the monthly CPR. I'm just turning on the CPR chart where I have the monthly, weekly and the daily CPR. If you can see these star lines, right, this is the monthly CPR and this dotted line is the weekly CPR. Even when we came here, I was tempted to buy calls here after this 5-minute candle rejected this. Now looking at a 5-minute chart, when this big green candle came, right, I was so like kind of tempted that we did hit the monthly CPR, we could get a bounce, but still refrained from doing it. But there were some good moves at some good CPR levels if we had traded based on the CPR. Now see, that's all part of the market, the loss, profit, and your strategy working and not working. It's all part of the market. There is nothing we can do about it. I took a position based on my knowledge and my experience, but this kind of move, seeing it after a long time, so I had to take a loss today. Now coming for the trade possibilities for tomorrow. From tomorrow it will be a normal trading based on CPR and other price action. See, today we did close above this strong resistance. I had this resistance zone from past few days, right? 30 8,300. We did close above it, but we have taken strong resistance at this level, that is 38,800. We exactly hit 38,804 and then reversed. So for tomorrow, in case this previous day high breaks, we might take a trade, probably until 39,200 or even R2. Obviously we'll be doing a regular scalping where we book profits quickly, but a good long trade can come here if this level breaks 38,800. And I'll be using this trend line again. We can see the market might take support again along this trend line. If this trend line breaks and the support of I'll move this line here, 38,300, and this line of, and if this 38,300 breaks, probably we'll trade for lower levels using CPR. And for some reason, if the previous day low breaks, that is 37,700, then definitely we'll be hitting probably somewhere close to 37,200. So that's a trade plan. If this level breaks, right, the previous day high, see the R1 is pretty close by, but we might try and take a scalp. R1 is pretty close by, at least until this level, 39,150, which is based on this price action. I've just shifted to an hourly chart to show where I got this. So in this level between 39,100 and 39,150, 39,036, 136 to 39,190, we could face some resistance here. Even if that is broken, then probably R2. And if I turn off the CPR, turn off the CPR and just, we could also be making going in this particular channel. Kind of this channel, so I'll have this also marked. Probably we can take even resistance again at 38,800, and probably even higher along this channel is also a possibility. Now just looking at the daily chart, in all these lines are for my other video that's coming up, trading based on trend lines. It will be uploaded soon. So looking at the daily chart, we have made a nice like a doji candle, but there is this significant resistance is not taken out, this level. Okay, let me just get rid of this, at least these two lines. See, though we have made a nice, this is a good bullish price action, okay, like a doji on the upper side, but we have failed to take out this. If this had taken out this, then yeah, probably we could say that the market could be a little bullish, but still this resistance is only if this is taken out, then probably we can see higher levels. So until this is taken out, we'll be a little careful. Once this goes either in the intraday move or however we get, we'll probably take calls. Now, how the budget is for the market, how the market is going to move, that we won't be able to dissect the budget. I won't be able to do that, but we will be trading from tomorrow. We'll be trading with the CPI levels and this price action level as usual. Sometimes I feel that is only better, just keeping all the news aside after today. Now in Nifty also the same thing happened. We opened, went higher and had this huge fall and kind of recovered the entire thing. So even those, if anybody had taken this call and put at the money even for Nifty, they would have been in loss because of this move. Now coming for trading Nifty for tomorrow, if Nifty has shown some good resistance at this level, that is 17,600. If this level is taken out, right, if we break this level, probably the next target is 17,700, and it can be even 17,785. And if this, I'm going to be using this trend line also in Nifty. If this trend line kind of breaks along with this, if this trend line breaks, right, we have a good support over here, that is 17,400, because here we have taken a good resistance that can act as a good support, and if this level breaks, probably we might hit again 17,270. So that is our plan for tomorrow in Nifty. Now just looking at the open interest for Bank Nifty, right, we do have some good resistance based on the OI at 38,500, and a good support is coming in at 38,000 based on the open interest. And if we cross 38,500, the next resistance is only 39,000, where we have some calls added all along. But over here we can see all the calls has been unwinded. It's only the puts that's been added, so 38,000 can act as a good support. But otherwise, just looking at the data in general, the market looks kind of like a sideways market as of now, but the open interest can change instantly, right? So we should not rely too much on this now. And the same when it comes to Nifty. See, we have some resistance at 17,500, but some put writers have come in today. The change in OI is showing more put writers have come in today, and even more put writers have come in until 17,600. So not, if this starts increasing, probably 17,600 can become a good support if the market goes higher. But the first level of resistance is coming in at 17,800 and even 17,700. There's some good resistance. The put writers have not increased, but 17,600, a lot of put writers have come in, and a lot of people would have taken position for even for this weekly expiry like option selling, right? Once the budget is done. So that's the reason you're seeing a lot of people would have opened the straddle at 17,500 or 600. That's the reason I think we're seeing too much open interest. But yeah, 17,500 as of now it's showing as a good support. We have closed at 17,585. So maybe if we get a dip somewhere close to 17,500 based on the price action, we can buy. Now just looking at this CPR, we have a white CPR in Nifty, which shows probably we can be sideways tomorrow. And for Bank Nifty, again Bank Nifty also has a white CPR, but an ascending CPR, showing the market might move higher, but it might be sideways. We might just get one or two scalping moves. So that's it for today. The budget day trading didn't go as we planned. There are a lot of moves that we could have recovered our loss just by buying direct calls and put, but because of the news surrounded in today's market, just avoided it, and I think that's a good thing. There's always another day to trade and make some good money. Thank you for watching.